Why your Singapore rental property might be losing money. Let's talk about a common situation many people face when investing in Singapore rental properties. Imagine you're planning to buy a condo for $1.5 million as a rental investment. Here's what happens. First, you'll need to put down 25% as the down payment, which is $375,000. Add to that the 4% buyer's stamp duty, amounting to $60,000. Together, that's $435,000 up front. The remaining 75%, or $1.125 million, will be financed through a loan. Now, assuming the loan is for 30 years at an interest rate of 2.75%, your monthly mortgage installment will be about $4,600. Let's consider the rental income. A typical 3-bedroom condo in an OCR, outside Central Region area, might fetch around $4,500 per month. At first glance, this seems like a solid plan. However, when you do the math, the numbers tell a different story. Breaking down the costs. Your rental income is $4,500, but your mortgage payment is $4,600. This means you're already $100 short each month. Now, add maintenance fees or MCST fees, which could easily be $400 per month. That brings your total shortfall to $500 monthly. If you're using CPF contributions, it might cover $100 and $200 of your monthly installment, leaving $3,400 to be paid in cash. After deducting your rental income of $4,500, you still have to fork out an additional $700 every month from your own pocket. This is why rental properties in Singapore are often not fully self-sustaining. While rental income helps offset some costs, it rarely covers everything, including your mortgage and other expenses. Capital appreciation, the real strategy. So, why do people still invest in such properties? The key reason is capital appreciation. Investors hope the property value will increase significantly over time, allowing them to sell it for a profit. This capital gain is often seen as the primary benefit of owning rental properties in Singapore. However, this strategy has its risks. If property prices stagnate or drop, your return on investment, ROI, can be severely impacted. You might end up holding onto a property that doesn't generate sufficient rental income or appreciate in value. Alternative scenarios. Now, let's consider a different scenario. Imagine you're retired between 55 and 65 years old and have sold your larger condo to downsize. You now have $1.5 million in cash and are considering buying a smaller property outright for rental purposes. If you pay the full $1.5 million up front, your rental income of $4,500 per month becomes much more appealing. Over 11 months, reserving 1 month for maintenance and other fees, you'll earn $4,900 annually. This gives you a gross rental yield of about 3.3%. While this yield isn't high compared to other investment options, it's relatively stable since you're not dealing with loan repayments. Exploring overseas investments. Let's also look at an alternative to deploying your entire $1.5 million in Singapore. You could invest a portion in an overseas property market with higher rental yields. For instance, if you put the same $435,000, your initial down payment and stamp duty, into a property abroad, you might find options with better returns. By financing the rest through a local loan in that country, your cash-on-cash returns could potentially outperform the Singapore market. However, investing overseas also comes with its own set of risks, such as currency fluctuations, property management issues, and differing regulations. Final thoughts. Investing in rental properties in Singapore is a long-term commitment. While rental income helps, the real value lies in capital appreciation. If the property value doesn't grow, you could end up with negative returns. For retirees or those with substantial capital, fully paying for a property can simplify things and provide steady rental income. But for others, diversifying your investment across markets or asset classes might be worth considering. Ultimately, understanding your financial situation, goals, and risk tolerance is key before making any property investment decisions.